Pains can see that it's hit the exchanges. There you have it. EBITDA has come in at 1,717 crore. EBITDA margins at 20.2%. This is bang in line with what the CNBC-TV18 poll was. And there is a sharp expansion seen in the company's margins because of lower raw material prices. Net profits, again, in line with estimates at 1,232 crore. Though there does appear to be a bit of a disappointment on the top line, and maybe the markets are reacting to that. So the top line was anticipated to grow by 5% on a year-on-year basis, but if the EBITDA has come in at about 8,400, 8,500 crore, it would be a flat revenue performance. So that, I think, would have disappointed the street, though the company has managed to improve their margins quite significantly. From 14.4, margins have improved to 20.2%. The bottom line number two suggests a very sharp growth of more than 50% on a year-on-year basis. But the revenue picture is a bit, underwhelming. I think 8,900 was the CNBC TV18 poll, and what we flashed was about 8,500?
We'll just wait by for the final figure in terms of the revenue. The revenue is coming at 8,479 crores. So that is definitely a miss as compared to the 8,900 odd crores. So that would mean that it's just an absolute flat performance which is coming on the revenue front. Volumes were estimated to come in at around 7 to 9%. We'll wait by for that. But I'm assuming that is going to be a little bit of a weak disappointment there. Mangalam, tell us more.
Well, it is a top-line miss for Asian Paints this time around. The volume number has come in at 6%. The street was working with a number of 7 to 9%, and that explains why the revenue has been below expectations as well. What's also interesting is that the differential between volume and value, the street was working with a number of -3 to -4%. But this time, with the revenue being flat and the volume growing at 6, it's telling you that the differential is -6%. What does that mean? One, the company has taken price cuts. Secondly, people are buying lower priced products, as a result of which the mix has become a little inferior, and that is what is reflecting in the absolute EBITDA as well. The margins at 20.2% are bang in line with expectations, but they are not because the company has gone ahead and done better on margins. It's just that the revenues have been lower and the absolute concomitant EBITDA has been lower as well. The net profit at 1,232 odd crores is in line with expectations, just as what the street was anticipating this time around. We were expecting over 500 basis points improvement in their gross margins flowing into the EBITDA. The EBITDA margin that the company has guided for is between 18 to 20%, so that's pretty much in line. The domestic decorative paint business for the second quarter was muted, is what the company is saying. My sense, again, for that is, one, there was patchy rainfall. Secondly, the festive season has been moved to the third quarter. And thirdly, the company has been taking a lot of price cuts. So every time the price cuts happen, it takes a little more time for them to reflect in increased demand. So these are the three main reasons why I believe that, maybe the company would have seen subdued demand. As they are saying now, erratic monsoon has impacted sentiment as well. The question is how the performance will be in the third quarter. And that is something we'll get to know from the management in the conference call.
Okay, well, we have Abneesh Roy of Nuvama Institutional Equities joining in on the phone line for his quick reaction on the Asian Paint numbers. Abneesh, hi, welcome to the show. Well, it seems as though there is a disappointment which has come in on the top line as well as the volumes.
Yeah, definitely. This is much closer to our expectation versus consensus. So if I see our expectation was 4% volume and 6%, so very in line. In terms of the sales also, we were expecting around 8,600 crore and now around 8,450 crore. So very similar to our expectation. Yes, this quarter, as Mangalam highlighted, the festival demand has fully shifted. So in December quarter, we expect double-digit volume growth for Asian Paint and the entire industry in the deco. And first and third month of Q2 saw very high rains. So whenever high rains happen, clearly the outdoor paint is not possible. So these are one-offs in our view. The margin of 20.2% is exactly in line with our end street. So overall, this was expected, but we had cautioned that the volume growth and the sales will be muted, which I think consensus was a bit on the higher side. But this is more of a festival shifting which has happened and the impact of rains rather than demand deceleration. Mangalam's point on the 6% difference on volume versus sales, I think that's a point well taken. That shows the discounting and maybe some level of down trading, etc. Some of the construction, chemical, putty, etc. growing faster. But ultimately, the profit growth and EBITDA margin is quite decent. And next quarter, we should see double-digit volume growth and double-digit sales growth coming back for the company.
All right, Amnish. So then the final question is that with the stock having underperformed its larger peers with the competition in sight, but still demand has been, like you said, deferred, not denied. What does one do with a stock like Asian Paints? It's pedigree, but going into a lot of competition, going into some margin headwinds when it comes to competition. How would you treat these numbers and the stock?
So 2-3 things. One is, of course, crude has also gone up a bit, and FI selling is also there, and generally the stock markets are in a bit on a correction mode. So in that context, I think Q3 should be a good trigger for Asian Paints. So that is something which will make a good buy at current level, because a lot of the negative is factored in. In terms of Grasim entry, it will happen in February, March. So to that extent, Q3 results will come before that. So there is a short-term play which is available. And my sense is Grasim entry will impact Kansai, Exo, and some of the smaller players much more rather than Asian Paints. And long-term, I think the industry is continuing to look at a high single-digit to a double-digit volume growth. So to that extent, yes, the overhang is there, but that's largely factored in terms of the current valuation, I would say.
All right, we have some more details coming in as well, and this is with regards to their non-paint business, a very small proportion of their overall revenues, but still something that the management keeps talking about as well. Bath fittings, the sales have declined by about 20%. Kitchen business as well, the sales have declined by about 18%. White Teak, which was their recent acquisition, out there's been a growth of 8.5%. And the industrial business actually saw an increase of 11.5%. International business, again, which is a smaller part, saw a revenue decline of 3.9%. We also have Amnish Aggarwal of Prabhudas, Lilladher joining in on the phone line. Amnish, your thoughts on the numbers? 6% volume growth. The EBITDA has grown in line with street expectations, as has the net profit. How do you view these numbers?
You see, two things. Although the festival season has got shifted to 3Q, but it never fully shifts to one quarter. So even if Diwali is in the month of November, even then we had, you can say, your Ganesh Chaturthi coming in you can say, towards the second half of September. Okay. And secondly, this year, August month.
Right, seems we've snapped that connection with Amnish. We'll try and repatch, but he said that there was some element of festive. All right, there were some elements of festive season buying in the second quarter as well. And his point on August was very interesting, because like Abneesh said, that when it's raining very heavily, it is difficult to paint the exteriors. But in August, it wasn't raining as much.
Yeah, I think he said, August and October.
August, it wasn't raining much. So let's see. Amnish, complete your point. I think we dropped the call. We lost that connection.
Yeah. So just a minute. Yeah, so Mangalam, the main thing is that even during the rainy season, a lot of the painting activities on the interior side, they continue, but the exterior painting doesn't happen. Now, if you look at the overall monsoon pattern this year, the monsoons are very heavy towards, you can say, from middle of July, and by, you can say, the end of the July, they dissipated. So August was, by and large, very dry month for the country as a whole. And that is why I believe that some sort of exterior painting activity would have happened in the month of August. Plus, the interior painting would have definitely picked up, because the festival, you see, there was a big mass in between. But otherwise, the festival season had set in on time, you can say, or early. So to that extent, I would say that the volume growth should have been slightly better than, you can say, 5 or 6%. That is one. Secondly, as far as the gap between the realization and the volume growth is concerned, historically, if you look at, say, past 4 or 5 years also, there was always 3 to 5% gap. Okay, the volume growths were always higher than the sales growth for Asian Paints, because putty and some of the other items which are selling, so their realization on a per liter basis or a per kg basis is lower than what is there in paint.
So, Amnish, it so seems that you are not very impressed by these numbers. What would your call on the stock be now?
You see, the stock, I think it had gone to 3,400 odd rupees few months back. And now it has already corrected to, say, roughly around, I think it is now less than 3,000 rupees. So my sense is that maybe there is no near-term trigger for the stock per se, because the crude has also bottomed out. From the bottom, the crude has moved up by, say, 20-25%. So the incremental margin expansion might not happen at that pace. Plus the Grasim entry is there. Now if the stock corrects maybe say to 2,800 or below, then it can be a trading buy. But till the time the dust settles on the Grazimentary, their strategies, and you can say the marketing and all, I think the Asian Paints will continue to move in a range because as such it's not a cheap stock. In terms of P multiple, I think it remains among the most expensive stocks globally, not only in India, as far as your paints market is concerned.
Okay. All right, Amnish, as well as the others, thanks very much for joining in and giving us all of that perspective on Asian Paints. As of now, the stock has recovered from the day's low, so it's down around 2.3%. It's been a flat revenue performance, and the volumes have missed estimates or the range that the street was working with. Mangalam, thanks very much for taking us through the numbers. That's all the time that we have on Mid Cap Radar. Closing bell just after a short break.